Okay, good morning, everyone, and thanks first of all to Patrick and the team at Invest and I for the opportunity to speak to you this morning. And Patrick has asked me to look at, I suppose, some of the practical aspects in relation to preparation of your lending application, particularly in relation to CBILS. I'm conscious that Jeff has already covered, I suppose, a number of points in his session around the banking requirements, around the 5 to 6 key areas. So I'm going to fairly quickly skip through the this first slide effectively. But I suppose some of the things, and this is very much echoing some of what Jeff has said as well, in relation to some of the key tips that we're getting. And I suppose for everybody, this has been a bit of a learning process. And from a GT point of view, certainly we have been spending quite a bit of time working with the funders to try and really assess how we can best help our clients. So I think the first point has been communicated by everyone is in relation to very much clear and timely communication engagement with your funders. It's critical, I think, to keep them up to speed with developments, and even in the pre-COVID-19 is making sure there isn't any surprises. So as you're working them through the process, that something doesn't come out of the woodwork that people aren't particularly aware of. I think the second point there, we get a lot back from our clients in relation to important questions around the speed of the CBILS process. And again, that was asked on the Q&A this morning. And my advice here is to help them help you effectively. So the application goes into the relationship manager and his team with the correct information, and so that they can process that quickly and it's in the right form. And again, it's not War and Peace. It's not a 50 to 60 page business plan, as Jeff has said, but it's also not the back of an envelope for, I suppose, sophisticated organizations. And Jeff has given a very good insight in relation to the clear focus of the bank in making their decisions. So my advice would be to give them really what they need. I think the other observation, I suppose, is that there is a lot of, I suppose, uncertainty. There's a lot of things actually hitting people at one time. So I think it is important that at least someone then takes that cold and independent view over what is produced, and certainly doing some sort of an overview there, which might end up mean that there's a tweak to some of the key assumptions. And certainly from part of our learnings, I suppose, is getting the comforts around, I suppose, how other cases have been handled and what sort of assumptions have been used there. And I suppose a final point is a number of clients coming back and saying, well, this is really a moving feast. How do I actually do a set of projections that are moving on? Again, the best advice, and that Jeff has said, is this is a best estimate of what the things are going to look like, and the advice is you need to cut the line at some point in time and then get those projections pulled together. Okay, so on to the next slide, Patrick, please. So as Jeff has said, I'm going to focus a bit on I suppose the critical part of the submission in relation to what the directors and owners have done to cut costs and reduce cash flow pressures on the business. So again, things that we are seeing coming through, obviously applications and being required and being by the funders, are things like securing obviously stage payments with suppliers. So what communication has been on there, and how does that then filtering into the cash flow, with particular emphasis on those priority suppliers. The conversations with landlords in relation to rent deferral, the key cost line being staff. So what staff have been furloughed and what staff have been made redundant, for instance. You're looking also where there is the owners who have looked to, I suppose, carry a bit of the cost as well by reduced owner remuneration. In relation to the financing part, we're looking and on the application to look at what sort of inquiries have been made around additional borrowing and reprofiling of facilities and what has been secured. And I think Jeff made the point as well in relation to where there is multiple lenders, that they are very much looking at what other arrangements and maybe capital repayment holidays have actually been secured. and making sure that these CBILS is not seen as being drawn down effectively to pay off other funders' debts. There is obviously a number of other government supports. So again, all of those should, and I mean, the good thing is a lot of people are doing these things, including the VAT deferral, the time to pay arrangements within Inland Revenue, and importantly, communication around acceleration of loss relief and obtaining credits early in relation to capital allowances and R&D tax credits. And obviously for some of our local businesses, then you're looking at the local government supports, particularly relevant for the leisure and hospitality sector. So I think in all, it's a combination of all of these things that I think have to be then pulled together and demonstrated as part of that application process. And I suppose the one thing then to remember as well is that for a number of these measures, these are probably cost deferrals, and ultimately payments will then need to be made. So it's important that those are then properly factored into the future cash flows. So the next slide, Patrick. So another key aspect then is then looking out into the future trading for the business. And I suppose the key thing here is allowing the funder to understand what the debt capacity of the business can be, and the ability, importantly, for the business to trade out of the crisis. And Jeff has alluded to it, that funders are very aware that this is a difficult task given the level of uncertainty. But I suppose the advice would be that businesses will need to look at this anyway, I suppose as part of the well-muted sort of exit strategy from COVID-19. And to me, this is potentially one of the most difficult and critical parts for companies who maybe have already achieved the immediate sort of survival of the business. But it'll be important that they're looking at the future and maybe a different market than they had before. An example of a client that we were dealing with, and they were in the bakery distribution sector. And I mean, their assessment is that in the number of customers that they might lose maybe up to 20% of their customers, and those are smaller customers, but those may well not be there post COVID-19. Some of them through failure, but some of them actually for owners who will just not open the doors again. In relation to the supply chain, companies will be looking at their level of dependence, and clearly as we come out of COVID-19, there is going to be very much interruptions to supply chains globally, and certainly we're seeing from clients significantly additional carrier costs for products. And obviously some businesses in the supply chain will not survive the crisis. So I would see it as a fairly high in the agenda of boards to try and understand what alternatives there might be for the businesses going forward. So Patrick, in summary, I suppose the key messages around the lending application process is very much that early funder engagement and communication with the relationship managers. Give them what they need to try and make sure that the process is accelerated. And I do think that given what's going on, some form of independent eye over the numbers is important, just in case there is sort of change in key assumptions.